Good afternoon, good morning, everybody, wherever you are in the world. My name is Rian van der Vyver. I'm the Chief Investment Officer at the Global Wealth Group. And the Global Wealth Group is one of the sponsors of today's webinar. I'm just going to quickly call up our presentation. You will see that the co-sponsors of today's webinar is propertynewsasia.com with Alex, who is also a panelist. We've got the Global Wealth Group or Wealth Migrate, and we are an investor into one of SixC's current projects. And then we've got SixC, who act as a developer, execution partner, and property manager of CoLiving. And SixC has been specifically created to take advantage of this new emerging asset class called PurposeBuilt CoLiving. I'm joined today by David Hill. David is the Director of Alternative Investments at JLL in Australia. As I've mentioned, we've got two founding partners from SixC, Jason Eggleton and Chris Brasler. And then we've got one of the team at SixC, Michelle Lee, who is responsible for interior design. And each of these panelists will do a bit of a presentation. We will have an interactive session. And if I may ask, if you have a question, you will see at the bottom of the screen, there's a Q&A box. And you can please post your questions there instead of the chat box. So it just makes it easier for us to monitor it. And then lastly, the CEO of the Global Wealth Group, Scott Picken, who is also here. Scott, welcome. And the purpose of today is it's more an educational session, which I find fascinating. And we're going to focus on co-living, which is form part of the multifamily space or the residential space. And the panelists will talk about what is co-living and why there is such a strong demand. But more importantly, because I don't think co-living is so well known to investors, from David's side, you know, what's the trends that we see and why this is so exciting on a world basis. So if I can hand over, Chris, to yourself, and if you don't mind, just to do a brief introduction. Thank you.
Sure. And Rian, if you wish to go into full screen, if you have that capability, that would be great. Excellent. Hi, my name is Chris Brasler. I am one of the founding directors of SixC. We are a co-living development and operating company here in Australia. And basically, our team is looking at about 200 co-living rooms in our current pipeline and looking to create a portfolio over the next few years up to several thousand. It's important to understand what co-living is. It's a community living model where residents share communal spaces and services for a higher quality of life. And they're looking at that as to be affordable as well. Go ahead, Rian. In major global cities around the world, we've looked at amazing population growth over the past 20 years. And this chart basically just shows some of those big cities. They're getting really big, and the housing supply is not keeping up with the demand. The IMF tracks basically the price of new homes as it pertains to the income. And as you can see, the price of homes is basically all over the world becoming more expensive over time. What that's doing is that's pressing more renters into the rental world all over the world. And what we see in the next slide is that all of these houses are moving faster in terms of the price rise than rentals. So what that's doing is pushing more people into the rental market. Co-living is one segment of the rental market.
Chris, if I can just ask, we have seen that housing prices, as you've mentioned, have surged quite a bit in Australia. Yes. But it seems like if the increase in rentals, that's lagging this increase in housing prices. So can you just comment, what's that fundamental support to rentals if housing prices start coming down, due to that lag?
Well, we're talking about housing prices that are unaffordable for over 50% of the population. So Australia was not historically a renter's market, but because of these price rises and basic lack of supply, we're seeing more and more rental properties coming on the market, but the number that is coming out, it pales in response to the demand. So for instance, we have at this time 400,000 visa holders that'll be entering the country next year, and we're right now at a 1% vacancy rate for rental property across the country in the major global capital cities.
So I think what is quite important there as well is that what we're talking about, co-living and so on, there's a shift from buy to own, to buy to rent, as you've indicated. And one of the big things talking about this demand from rentals is the flexibility in terms of rentals that's offered by co-living. So thanks for that insight.
Correct. So a bit of co-living history. Co-living started as co-housing back in the 70s in Denmark, Sweden, and Norway. Prices were going up. People wanted to live together and share services so that they could save a little bit of money and they could have a communal experience together. In the 2000s, that moved into Netherlands and Germany. And then in the 2010s, you see it spread around the globe in the form of co-living, which is more for individuals or couples that are living together. So we see it growing in China, India, and in the United States. Later in the presentation, we'll be talking about the explosion in the 2020s and where we see it all over the globe now. The different types of co-living, basically it started, as I said before, in the 70s and 80s with co-housing. So that's families that are in smaller homes that go to a communal area, which is on the same property. In the 1990s and 2000s, we saw house share and flatmates. These are apartments, basically a 3-bedroom apartment that's being rented to 3 separate people. Purpose-built co-living was the next generation to come in, and we see it as basically apex of the co-living movement, where it's an exclusive furnished studio provided to the resident. They have their own ensuite, and then they have engaging communal areas that they can go to with the rest of the residents to be social.
Chris, if I can just also ask for the benefit of our attendees, can you just place purpose-built student accommodation and boarding, into context with co-living and that evolution, please, if you don't mind?
We'll be talking about it a little bit more in the presentation. However, when people are growing up, they're living in their bedroom, let's say, and then they're moving into more curated spaces for their experience. And so what we look at with student housing is, this is a great slide, the evolutions of co-living. So to give you an idea, the simplest function of co-living is you're living in your room and you come out and you hang out with your parents. If you're in a backpacker or a hostel environment, you're basically living in a room that doesn't have a bathroom or communal area in it. It's a bed. It's very transitory. Boarding house is very similar to that. When we do house share, we're not choosing necessarily the people that we're living with. There are many companies around the world right now that are providing individual rooms within either a house or in a larger apartment unit that individuals that do not know each other are going to be living in. We're not comfortable with that model. We believe that the exclusivity allows a resident to have their own private space, their own private experience, and then they can come out and be in a communal space if they choose to. A serviced apartment is also transitory, but purpose-built co-living, we see people living in these homes for 3 years at a time, and they're very, very happy. Or they go from one co-living experience in one city to another co-living in another. They do not have to take the furnishings with them because they're basically a digital nomad and they enjoy that experience.
Chris, so thanks for that, and my apology for skipping ahead.
No problem.
So I think the key point is, that we've got a model that we can base the co-living story on in the form of boarding, but more importantly, especially in Australia, purpose-built student accommodation as a precursor for co-living. And I think what is so critical, as you've mentioned, that SixC and through your partner Highgate, there is experience and a track record of doing purpose-built co-living.
We see this experience. You can tell my accent is from the United States. In Pennsylvania, we have University of Pennsylvania, Drexel, Temple. All of these are in the Philadelphia area. And we look at co-living growing up around the university hubs for the postgraduate students, those that are moving on to their doctorates and those folks that are moving into the working stream. But they're very much all professionals who have enjoyed a student housing environment and are familiar with it. We can move to the next, I believe. What do our purpose-built co-living facilities look like? These are two on either side that are in Sydney, and the one in the middle is the Brisbane co-living facility. Co-living communal areas can be as sophisticated as skyline views. They can also be swimming pools, depending on how many units are supporting the communal area, as well as simple as a cafe or a co-working area, which is what we have designed for one of our facilities in Sydney. Purpose-built co-living works on basically a calculated formula of space. People, if they're in an extremely dense area, might be saving a little bit of money, but that's more like a boarding house, and they're not going to have as much privacy, exclusivity as they'd like, and their communal areas are always going to be jam-packed, dirty. It's going to be a tough environment, but it's going to be cheap. In a low-density environment, that's basically like suburbia, where individual families or people live in their homes and they never come out and they see each other, and it's a very expensive model, including many of your high-rises, 1 to 2 bedroom units where one person's living there. There's a lot of waste in that environment. So what we see is an appropriate density model is 23 to 25 square meter rooms for 2 people to exist together, and a 16 to 18 square meter room for individuals.
Chris, am I right to say that research has shown if you increase the number of units, talking about this right density, you can pick up to a 12% yield premium in terms of rentals, just by being smart in obtaining that right density?
Our yield is based on more units per square meter. It's a very simple formula, but there is a tipping point where if you try to pack too many in, the experience is not good. The word gets around and people don't want to go.
And I mean, a simple example would be in Brisbane, where the initial designs had more 4-bedroom units, or let's call it 4 occupant units, and that's been changed to 1 and 2 bedroom units.
Yes, we find that the exclusivity, people really want private area for themselves, and trying to make them roommates or even small flatmates that have the common area right there. It's the same as providing common area for 10 to 15 people, as opposed to putting 2 or 3 people, because you never know what that other person is going to be like. You're hoping that they're going to be wonderful, but you have to have the ability to have some exclusivity.
Makes sense. Thanks.
The typical co-living offering is a furnished studio with an ensuite. It's on-site management, security with a QR code access. Everything is single bill on a single platform. So there's only one bill, and it's weekly automatically debited out of your account. The facility has to be sustainable and affordable with the convenience of additional services provided. We provide yoga classes. We might provide additional opportunities to go into the community for dinner on certain nights and get discounts from stores in the community. We also have the communal areas, and depending on the size of the facility, we will always have a gourmet kitchen and dining area. We'll have co-working, conference rooms, barbecue areas, sun decks, cafe, and in some areas, like in Brisbane, we'll have a pool. The individual unit, the way it is designed, and Michelle will touch on this later, it's going to be a top range ensuite. We know from our control groups that we've worked with the residents that are staying in co-living, that they do not want inexpensive taps. They do not want inexpensive tiles. They would like to feel special. And we can do that because we're cleaning these facilities on a regular basis, and we can make sure that they're kept up to to the top notch cleanliness and presentation. They all have a kitchenette that is fully outfitted for when they wish to cook in their room. They have a little bedside niche with a charging station and a little bit of a light, a little cubby area where they can feel special and they can kind of hide away. They are all air conditioned. They all have natural ventilation. There is an area for sitting in different spaces so that you can experience the room with different exposures, so that you could sit either in the window or away from the window, facing a different direction, and the sunlight is coming throughout that space. What you were talking about before, Rian, was the formula that is basically a two-way formula, which you will find in this presentation. One is we're able to provide a rent savings to the tenants because the facilities are smaller. We're giving them additional services, and we're still creating a higher profit opportunity because we're just building smaller spaces.
So am I right, Chris, that we've addressed this last slide? Can I hand over to Jason?
Sure thing. Thank you.
Excellent. So Jason Eggleton is next, and Jason will be talking about the co-living global trend, which I think is so important, just to put it into context. So Jason, welcome and thanks.
Hello, everybody. My name is Jason. I'm also here in Australia. I am the head of acquisitions and development process for our vertically integrated co-living buildings. What I'm going to talk to you about is the trend in co-living and how it has grown exponentially in the last decade. Co-living, as we know it, roughly started in the US in San Francisco and Silicon Valley, where rents became really expensive and people then had to share together to making accommodation affordable while they worked and started in startups. The places where it's the largest at the moment is in China, India, the US, and starting to grow traction in Germany. We're talking about the locations and why co-living is now becoming such a strong asset class in the world. It's because of the affordability crisis globally and people wanting to live in areas that have wonderful facilities. So one of the things we're looking at when we're deciding on a property is we want it to be close to the CBD, close to employment zones. We don't want people traveling for hours or longer than 45 minutes to an employment area. We also have to have around the homes, around our vertical villages, retail. People need to have good malls, good social interaction. They want to be within an easy walk or a ride to a market or a grocery store or a cafe. They also have to have the ability to go out to restaurants nearby their homes, nightlife, and places where our demographic, our guests, want to be entertained. The other key driver we've found that makes pure economic sense is to put our locations within some of the biggest economic drivers, which we see as hospitals, education, and primary industry. The other factor, what our guests tell us, is their relaxation time and how they like to spend it. We find that the majority of our guest residents like to be next to nature. They like to go for a walk in the park, lie on the grass, go to the beach. So all of our offerings are always within either close proximity to a large garden or park or a beach. And the other thing that we've found is because we do have a lot of digital nomads, is that an easy commute to an international airport is important. As you can see by the following couple of slides, globally co-living is in high density residential flat buildings that are purpose designed to be studios and large communal areas. They're in quite dense urban environments. They're not in a traditional suburban single or story or two-story housing environment. And the key factor we're also realizing is that today's co-living occupant or resident is actually going to become a lifetime renter. As the disparity of affordability widens, we're finding that this generation that's coming now to live and go to start working as a professional doesn't fully or will never actually be able to own a property. So they've grown up in a rental environment from birth, and they'll be there till they move on. So we're seeing that people go from teenagers where they have their own single room, and their point of difference or their point of connectivity with their friends has always been through an electric device, be it gaming or texting, etc. When they move to universities, they start to have their first real inkling of a shared environment. They'll have their own dorm room, they might share it with another person, but they'll be using the other facilities within the purpose-built student accommodation building. That is the gym, the pool, the reading rooms, the study nooks. They'll be socialising with the other peers. And then where we're posted is just post that university sector. We do have some university students that stay with us, but the majority are post-university, and it's their first real domicile, it's their first real home. They love CoLiving because our offering is bespoke. They don't have to go and buy furniture. Everything they have is at their fingertips. It gives them the community that they want. It gives them the environment they want to live in, and it gives them the ability to interact and progress further in life. After this, we understand that people will go to a build-to-rent environment. So they won't normally be, they'll either go off and buy a property if they can, or they'll move to then a 1-bedroom, 2-bedroom, or 3-bedroom apartment or house. Then
Jason, one thing that stands
Yes.
out from this is with purpose-built student accommodation being so established in Australia already. I mean, this student accommodation automatically creates further demand, for co-living, as you've mentioned. So it's not only the surging house prices that's creating a demand, but it's almost this funnel that comes through from students that know purpose-built student accommodation, and now they just want to continue with purpose-built co-living, which provide this fundamental support for the demand that we've been speaking about.
Yes, I'm sure David will allude to more of this in his discussion, but there is such an undersupply of both co-living, rental accommodation and student housing that the demand far outstrips the ability to us to create and build enough properties. And then it comes back to who is our guest, who is our resident, who lives here. They're basically predominantly between 20 years and 44 years of age. They are highly educated, motivated, young professionals. Of course, we put them all around hospitals. We have a lot of healthcare workers. We have a lot of aged care workers. They're digital nomads. They're city dwellers. In Australia, we have what we call essential workers. So this is like our teachers and our nurses and our firemen and our police. And because of the huge economic policies of governments, we're finding that a lot of the residents are also infrastructure trade workers. So they might be coming to a major city like in Australia, Brisbane, Melbourne or Sydney to do infrastructure works. That's working on the new hospitals, working on tunnels, working on roads, working on rail. And we don't see that stopping anytime soon.
If I may ask, Jason, it was big news that Brisbane got awarded the Olympics 2032 rights. Can you just quickly talk how that infrastructure trade plays, towards the Olympic Games, and how that creates almost like a build-up in the 10 years to the Olympic Games through infrastructure spending, and also, more importantly, the infrastructure trades, and how that speaks to co-living and the demand for co-living?
So a very strong friend of mine is being involved with the Brisbane Olympic pitch. He was there with the city prior to. And one of the main discussions that everybody on that committee talks about is infrastructure. It's not so much putting in the stadiums and the pools, because Brisbane already has that. But what they don't have and what they're spending is in the infrastructure on trains, networks, transport. So over the next decade, they'll be spending billions of dollars on their roads and their rail and getting their transport network up to speed. So that's a great thing for us as an operator, because we'll have the need for accommodation. And also, once infrastructure is improved, it improves the workforce, which improves more people coming to a city. So inevitably, it's an ongoing cycle. Infrastructure creates work to create it, and then it also creates jobs post-infrastructure being completed.
Excellent. Jason, and then I like to be practical, for our attendees to understand what we're talking about. So if you can just take Brisbane and Latham Street as an example, and we talk about your typical resident demographic and also the location. Can you just mention one or two things in the area that speaks to, for example, the teachers, the nurses, and so on?
So I'm head of acquisition. So the things I look at are who are the key drivers to bring us our guests and our residents. In Chermside, which is a suburb of Brisbane, they're about to spend $7 billion on upgrading one of the largest hospitals in the area. The net effect of that capital expenditure is, one, there'll be about 60,000 trades working on that building over the next 5 years, which is a lot of people. You'll also then have an influx of nurses, doctors, orderlies, food preparation people. There's about 7,000 staff that will be generated from that increase in the hospital, roughly. So we see that as there's going to be accommodation need for the people working on building the infrastructure. And then there's going to be a long-term need for nurses. So generally nurses come to Australia on a 3-year visa. They'll work for 3 years, mainly from the UK, Ireland, the Philippines. And we see our accommodation as a wonderful transition for them. So they might come and live with us for a year, 18 months, and they might live their whole 3-year tenure. They've got a beautiful, safe apartment that has great common areas that they can work, relax and play in.
Thank you for that.
So yeah, that's the drivers. Yeah. So coming to why, as we just discussed then, we're affordable. Why we're affordable is we're a one bill per resident. So that means that your electricity, your water, your gas, your internet, everything is provided in your bill. And because we have mass, that's a saving in a lot of instances for most people. They don't have to go out and buy furniture. It's fully furnished. So in the scheme of things, when you add up each one of those little costs, we're well under what that cost would be in our offering to the guest or residents. We also give, especially in the time of COVID, social connectivity. We found that a lot of people we've been reading about have had, depression and their health issues. And we've been reading and understanding that co-living helps with wellness. People love to be connected. It might just be a simple thing of just saying hello in the morning as you walk past the corridor, or it might be you might share a breakfast or a lunch in the common area, or you might just be working and have a general conversation. And that social connectivity is a big driver for co-living. It's also desirable because people have a great private space and wonderful communal areas. It's flexible. Our residents aren't locked in for a year or 2 years in their rent. They can stay in some instances overnight, 3 months, 6 months. It's very easy for them to exit if they need to, especially when a lot of them are digital nomads. And it's lifestyle, as we said before, parks, beaches, close to the city, nightlife, all those things add up to give a very desirable resident experience in a vertical village.
Jason, if I can just, in terms of flexibility, if we talk about the shorter minimum lengths, it almost might create the idea with the investor, it's almost like an Airbnb concept, which it is not. So typically you're targeting between 3 to 24 months kind of lease periods. Is that correct?
That's correct. So it depends on the state and the city. So in Sydney, our minimum term is 3 months, 90 days. Okay. Most of our residents stay for a minimum of 2 years. But the minimum, they can stay is 90 days. But in Chermside in Queensland, we have the ability, when that project is completed, to have nightly stays, weekly stays, and a shorter tenancy, just because of the controls in that council.
So I think the two things for me that I want to take away for the investors in terms of this is we're looking at roughly an 18-month average lease period, but more importantly, giving this different periods of leasing, you get this diversified base of guests, which then brings diversification benefits, in terms of the lease profile to a property, to co-living.
Rian, if I could interject, we have a 1% national vacancy rate in Australia in capital cities at the moment. In Brisbane, it is less than 1%, right? So if you look at what losing 1 week's rent is, basically these properties don't even lose 1 week's rent and then hand over the changeover. Having tenancies or lack of tenancies is not an issue. There is really no vacancy.
Yeah, I think I saw a stat in Brisbane that any rental property that's available in the market get taken up in 30 days, so there's a big demand.
Yeah. So we build homes. That's what we are. We are in the business of creating environments for people to live. And what makes our environments wonderful is our co-working, our conference rooms, and our business centre. People, and this has been very evident with COVID, people can work from home. They're not just in a studio apartment, a micro apartment. They also have the ability to feel like they're in a larger domicile. We have gourmet kitchens where if they want to hold a dinner party, they can use the kitchen, use the dining rooms. They don't have to be in their own apartment. We have cafes, we have cinemas. We create outdoor experience with sun lounges and barbecues and pools. With our gardens on the larger properties, we're creating biodiverse gardens. So that means we have we have flowers that help bees that are all eco-friendly. We have contemplating spaces where when you are extremely busy and you need that time to just think, we give you the space to do that. And then there's also the environment where you can have pool tables, etc. Well, the one key factor about our buildings are they are ESG fundamentals. Our residents require us to be socially and environmentally active. And also the good thing about Australia is we get great incentives for doing this off councils. They give us rebates or cash rebates for being greener. So we put solar farms in, we do biodiverse gardens, we have car sharing, bike sharing, we do recycling, we try and create our residents' carbon footprint to diminish. So everything we can possibly do, which is better for the environment, we do. And it also helps our buildings because we build in such a way that we build for longevity. We cut our running costs down, which improves the value of the asset.
Jason, I see Scott's got his hand up. Scott, a question or a comment? You're on mute.
We're touching on. Can you hear me?
Yes.
Yep. So I know we're touching on the ESG fundamentals here, and I just wanted to remind everyone that we've got an entire webinar as part of this webinar series on green living, because I know certainly from our investors and investors around the world, it's something that people really want to be part of. So I know, Jason, you're touching on it now, but I just wanted, for people that are really interested in this, come along. There's going to be an entire webinar just on green living and how you can not only invest to make a profit, but you can have a purposeful and positive impact on the planet.
I think, Scott, if people really want to know about what ESG is and how well, David Hume, who's one of our co-founders, is going to be speaking in the next seminar next week. And if people get the opportunity to listen to that, it is so worthwhile. And he has a fountain of knowledge on the subject. Coming to my last slide about co-living and the investment, what is the benefit? Because at the end of the day, investors want to know, why would I put my money in co-living? Why in this residential asset would I do this? Well, it's been shown, especially by the Massachusetts Institute of Technology, MIT, that if you look at the build-to-rent asset classes, which is a traditional multifamily, which is 1, 2, 3-bedroom apartments in a complex that is rented purely for rentals, build-to-rent, and co-living. Co-living shows a better return on your equity per annum. And what it also does is, even though your costs to build it are slightly higher, your return on that equity is dramatically more, up to nearly 50 basis points better. So as an investment, co-living gets you more money per square metre than any other residential asset class. That's a big positive.
Right. Jason, thank you very much.
Thank you very much.
David, so if you can just do a brief introduction, please, and we're looking forward to a nice interactive discussion.
Great, sounds good. Thanks, Rian. My name is David Hill. I'm the Director of the Alternative Investments business in JLL for Australia, and I look after the living sector's capital markets team, covering transactions across the living spectrum. We set up the team in 2011 off the back of increasing interest in the student accommodation subsector in Australia. really driven by the success and institutionalisation that the UK student housing market has had. And we started seeing appetite from some of those operators and investors from the UK coming out to Australia. So responding to that demand, we set up a dedicated team to essentially facilitate that investment within the sector as it emerged. Since then, and more specifically since 2019, I've advised on over $4 billion worth of living sector transactions. So just a bit of a gauge on the scale and how we've seen exponential growth really since 2011. During that time, I guess if we look at the living spectrum, essentially, we're talking about, as been discussed previously, student accommodation, which is sort of targeting that 18 to sort of 23-year-old cohort, CoLiving, which is sort of up to the mid-40s, build to rent, which is, as has been discussed, there's sort of a larger scale product, more sort of aligned to traditional apartments, which the target market's typically sort of 25 to sort of 60 years, and then later living, so retirement living and certain types of specialised accommodation as well. So in Australia, it was sort of the bookends that went first. Student accommodation had a lot of interest in development and retirement at the other end of the spectrum, but there's been a big gap until recently in the co-living and build to rent. And in the last 24 months, we've seen significant appetite coming from global investors looking at this space. What's really driving investment and global capital allocation into the living sectors are essentially the demographic drivers and the needs for housing. Everyone needs to live somewhere. So it's those fundamentals that are really drawing a lot of this global capital and most namely sort of pension funds, big interest from global pension funds that are the biggest investors in the world. We're talking across office, industrial, retail, and now they're looking to the living sectors given its diversified customer base, stable cash flows, predictable cash flows, and that simple fact that everybody has to live somewhere. So in their view, it's only going to get bigger as we turn to sort of continued population growth. And at a more sort of micro level in Australia, again, the fundamentals are there to sustain migration to the country as well as organic population growth. Talking sort of the intricacies of product as well. So student accommodation is the first asset class in Australia. We're a fortunate country and market in the sense that our student accommodation is an excellent standard. We've seen design really progress over the last 3 to 5 years and a delivery of a lot of premium product in the market. And very similar to what Chris and Jason have been speaking about in terms of the design, a big focus around common areas and creating a sense of community and culture while providing sort of in rooms an efficient layout, with sort of ensuite bathrooms, but really that focus is about that living in communal spaces and creating a sense of community. And that's what translates into co-living essentially. It's not different in product design to student accommodation, in that, as it's been discussed, still very specific in product, but what it does is it creates that community. I think to point to sort of some of the differences though between student and co-living, student works at big scale. We see assets between, say, 350 beds up to 1,000 beds, where scale's the game. I mean, students are in and out all the time. They're living to their own sort of beat of the drum, but there's still that operational similarity in co-living and that sense of sort of collegiate feel. Whereas co-living, being more of sort of a mature cohort, we think works at a better size of sort of between sort of 100 to 250 apartments in a building to still maintain that sense of community without getting lost in the scale of it. So just one of the sort of differences, but the opportunity in co-living also presents where assets can be clustered together and get operational efficiencies out of operating multiple assets within a particular area to essentially gain the scale that's required to entices essentially institutional capital into the market. Because at the end of the day, these big global investors that are looking to enter markets, they're not talking about deploying $50, $100 million. They're looking at multi-billion-dollar deals. And that's where we think the opportunity presents for co-living, for private groups to come in, sort of build up pipelines, essentially backed by private capital in the first instances. And then once they've got platforms of scale, we'll start seeing that real sort of global low-cost capital coming in with appetite to swallow up some of these platforms. And that's where you start seeing very very fast yield compression at the back end as that sector becomes institutionalized. So very similar outlook for co-living as we saw in build to rent, where back sort of 4 or 5 years ago, we were seeing yields at about 7.5%. We now see them at about 5.5% for the same assets. So just really a reflection on that global capital and appetite as the sectors evolve and gain scale.
Yeah, David, and I think just important for the attendees to understand, as yield compress, market value goes up, i.e. Capital gain.
That's
kind of thing. Yes.
That's exactly right. So as yields compress over time, asset values go up, and those that have the foresight to be in the sectors, that's where they see their returns supercharged beyond just the cash yield, essentially. And that's a function of, I guess, that risk and reward. So early movers into the sector have the ability to or take on the risk, obviously, that's associated with an emerging sector, but obviously, driven by the fundamentals, build the pipeline, gain the scale, and then look for essentially an exit strategy at that scale. And we sort of see that scale from global sort of institutional groups at, in student, it was always sort of around the 3,000 to 5,000 beds, but co-living could be a little bit smaller, but that's sort of the scale of where the appetite sits. So to Chris's point before, it's an opportunity, and without the threats of an oversupply, because we're starting from such a low level, particularly in the co-living market, that opportunity exists to gain platforms or build platforms of that scale and look towards that liquidity event when we see global capital coming into the market.
And I think a key point, talking about an institutional play with SixC, working on more than one co-living property, one can easily put that into a portfolio, which then creates that exit strategy to that institutional market, which I think is quite important, from a potential investor perspective, where that exit strategy could sit.
Absolutely. I mean, that liquidity event is always critical to any investment, essentially. It's always a consideration. You can go into something, but how do you exit it, or how do you realize your returns? And that's really the strategy here is entering the market, building up scale, and waiting for that wave of capital to come in the back end when the sector's got enough scale that these groups can come and deploy their required equity, essentially, within the markets. Interestingly, sorry.
No, please, sorry, apologies. I thought you're done.
No, that's all right. I was just going to add to the comment, sort of on that progression of and the emergence of co-living off the back of student accommodation. We've actually seen a couple of the major student accommodation groups move into a quasi co-living product. So groups like Scape, who are the largest owner and operator of student accommodation in Australia, with around 25,000 beds here, have recently launched sort of a co-living product within their PBSA buildings. So it's specifically for education-related use, but again, it's a sort of a slightly larger room than what we see in student. It's appealing more to academic staff, postgraduate students, and it's sort of that transition into co-living as a standalone product. And the second group to do that's Eggleton, as well, who are a big student accommodation group backed by GIC, the Singaporean Sovereign Wealth Fund, who are this year opening their first dedicated co-living asset in Sydney as well. So a good vote of confidence, I think, from some of the big student accom players.
Yeah, and I think, speaking to Jason's comment about low occupancies, as we know, pension funds, they need to look after pensioners. So there's a liability that they need to match. And that's almost like reliable income stream through the rentals from co-living. And until then, that residency stabilized, then you get that capital kicker at the end, which makes this such an attractive asset class.
Yeah, absolutely. I guess the diversified sort of customer base, but it's that active management to really drive those returns where, sort of as Chris and Jason were saying, managing those sort of rollovers to ensure sustained high levels of occupancy through active management, similar to sort of a hotel style accommodation where it's service about attracting the customers, it's maintaining them, and so driving retention through an enhanced experience. And then it's also about sort of minimising any downtime between rollovers. So technology really comes into play here as well, where adoption of good technology and platforms sort of allows you to manage that process really effectively. And I guess sort of from enhancing returns, being able to manage cost base as well. So some really exciting things happening in the space around that operational expenditure, sort of cost management, particularly around playing to ESG as well, as was mentioned, sort of active monitoring energy use, automatic lights, automatic air conditioner, so sensing, sensors around the buildings to really sort of reduce unnecessary consumption, reduce cost base, enhance returns, which is a big key theme.
Excellent, David. Thank you. That's very insightful things from a gentleman that works with this on a day-to-day basis. So thanks for giving us that market context, that feel. So if you don't mind, I'm going to jump over to Michelle because I see we're at 45 minutes. Alex, I hope we can steal a few more minutes because I think it's really value-adding, these kind of discussions. So Michelle, over to you. If you can talk about the design and so on of these units, please.
Thanks, Rian. I'm an architect in Sydney. I've got a background in retail architecture and customer experience, but I've recently been working on the interior designs of around 200 rooms in Australia. If you go to the next slide, please. So I'll start by looking at the key design objectives, which is the most important thing in any design process, but I think it's particularly important in co-living because we need to define first what is the experience that we want to create, and then how can those experiences inform the design of the physical space. So a little bit different from how you would typically approach, say, an apartment building. So the first objective in our experiential framework is this idea of affordable luxury. So almost it's like living in a hotel without the price tag. And this comes with providing a hotel-like service such as cleaning and linen. But more importantly, it's about prioritizing and curating that customer experience. So slightly elevating those couple of everyday touch points is really important. I think also in the same vein, it's about, although the space is limited, the furniture doesn't feel temporary. So we're really trying to avoid those fold-up tables and beds that, while they might be spatially efficient, they're actually not really aligning to the idea of luxury. The second objective is, although we're creating high density living, I think it's about making people feel like there's more than enough room for themselves. So we can achieve this through really simple design cues, such as maximizing the efficiency of a room's function, ensuring that there's always natural light and ventilation, adding the material warmth as well, so that people can visually expand those spaces conceptually and also physically. Thirdly, that sense of ownership. So although those rooms are fully furnished, we want to make sure that there's actually enough room for people to give a sense of their own ownership over it, and being able to adapt and customize the space to their own needs. The second slide, please. So how can we achieve all of these three objectives in about 15 to 25 square meters? I think the first and foremost, it's about separating the sleeping, eating, and living zones. So this might seem quite counterintuitive in a tight space, but we found that actually by emulating how someone might use a typical apartment, it actually expands that space even more. So what I mean by that is that people are able to close up their sleeping space during the day, and at night they're not sleeping right next to the stove, which again is not the type of experience that we want to create for people. Secondly, ensuring that, and this is just a simple efficiency strategy, it's just making sure all the functional uses, the kitchen, the bathroom, the living, as much joinery is on one wall. And on the other wall, then it's an adaptable storage wall. So it actually allows people to have that flexibility and personality. And between the function and the adaptable, then inserting this, we're calling it a sleeping pod. It's this sort of volume that isn't a bedroom, but it's almost like this mini bedroom. And I'll show you some images in the next slide. Just some examples of how, strategy in action. So those were the 4 bedrooms within a development. So just demonstrating that we can use this strategy in a number of different configurations. And these are some examples of how framing a bed can completely change how the bed feels, and it doesn't feel like it's in the middle of the space, but it occupies its own space. And then just some different variations of how we can look at this idea of an adaptable wall. So the top left is a pin board, which people can customize to their own use, or we can also look at a continuous rail that goes down the length of the room and again opens up that opportunity for different storage opportunities.
Michelle, if I look at these pictures, it creates, that three-dimensional feeling, that space feeling, which I think you've been talking about with the optimal design. And one thing that jumps out at me as well is, if I'm using co-living, I don't need to go and buy furniture and stuff, everything is there, it's ready to go. So I must say it's quite impressive in terms of the design work that you're doing and you and your team's doing.
Thanks, Rian. So this is an example of a studio room. It's one of the smallest rooms we've worked on, which is about 13 square meters. This was quite an interesting design exercise because, we typically just stand or we sit in a room. So we really looked at how can we open up those sight lines of standing and sitting. One of the things we found was actually the upper cabinets in a kitchen often happens right at your eye height and can close up the space visually. So in this instance, we replace those upper cabinets with a continuous rail, as I showed in those previous images, and then really opening up the space, but then allowing the customer or the residents to overlay their own personality onto it. And you can see also that throughout the day, the space changes with a really simple strategy of just one curtain rail. So you can close up the kitchen during the night, and use it to the different advantages. This is another example. This is a twin bedroom. So we have two really great windows in this bedroom, which is quite rare in some of these developments. And this was a great opportunity. So towards the end window, we had a bed that we then raised onto a platform, and this meant that we could actually delineate the space vertically as well. Again, using the use of the curtain rail and just those simple storage and furniture designs to maximize the space.
Can I maybe at this point just post a question? We've got a question from Frank Ferreira saying the age group 30 to 50 will probably have families. Jason, I think you said our target market is 25 to 44. How is this catered for?
You're talking about how is it catered for families, Rian?
Yes, that's correct. Yeah.
Yeah. So as it was depicted in our renter guide, when people transition to start having a family, they will move to a multi-family building. Now, all of our developments are studios. They're for two people only. Now, that two people could be, we could design it for a single parent and a child, but they are designed for two people only.
Okay, thank you. Michelle?
This is a more generous room type. This is a development in Sydney. This apartment's about 25 square meters. Again, you can see we've used that functional area just along one wall with the kitchen, the pantry and the couch, and then elevated that bed onto a platform, forming a kind of mini bedroom. There are beautiful floor to ceiling sliding doors as well, which then enables the resident to close off different functions during the day. The next slide, these are smaller rooms in the same development. So another iteration of the idea of the bed pod. Breaking of those right angles actually gave a completely different sense to the space as well. So yeah, really exciting opportunity for a different type of bed pod. And I just wanted to show the next overlay of design in the process. So we look at palettes of finishes and look and feel. I think it's really important with these projects that we cater for the specific location and demographic, so it feels purposeful and catered for the actual resident and the context. So this is a mood board for a development in Queensland. And when we researched the area and the residents, it was evident that the look and feel that is needed is to be coastal and bright and light and have that kind of relaxed feel with plenty of greenery. And you can also see then the pared back luxury that we're using through the bronze details and the signage. So alluding to that sense of affordable luxury again. In the next slide.
Trying to get there.
I'll just quickly touch on our approach for shared space, because of course, shared space is an incredibly important part of this project, of these projects with co-living. So in terms of experience, I guess the first objective is to include variations in the types of spaces that we provide. So it's not just about a huge common room with a couple of couches and a pool table. but how can we create smaller pockets and rooms within rooms so that you can feel comfortable by yourself, comfortable with another friend, or comfortable in a major public event. And that can really be supported by designing the space. The second objective is the hierarchy of sharing. So I think this is a really interesting idea of, actually social space is the easiest thing we can share. Social time is probably a little bit harder, but personal time and personal space is the hardest thing we can share. So I think it's important when we design these spaces that we remind ourselves that we are creating vessels for people to share their time, which is probably the most precious thing we have. And with time, we need to think about how a space can function from day to night. And thirdly, I think it's important to approach these buildings as ecosystems. So when you think of that chance encounter in a hallway, this forms a connection, which then forms more connections. And this is the thing that breeds culture. So while our space can support that, it's really those connections that creates the vibrancy and the success of the buildings. And yeah, it's just very important to keep in mind. And these are some examples of what I'm alluding to. So I think a powerful mantra is to escape the ordinary. How can we inject fun and whimsy and unexpectedness into a space? And I don't think this needs to be expensive and complicated. You can see in that bottom image, the simple lines on a pavement completely changes how people feel and move through the space. I think it's really interesting to look at at furniture not as just a couch that you get from the store, but as mini internal landscapes. And I'm alluding to that in the top 3 images of different ways that we can use furniture that's built in and creates those chance encounters. And the top right corner image is a really beautiful way that an architect can just can create smaller rooms within larger rooms. Again, this changes the way that people congregate in a space. And my favorite image is actually that image of the family on a slide on the swings. It's actually a bus stop in Canada. And, I feel like the designer could have just created a nice looking bus stop, a nice looking seat. But what they did was they changed the seats into swings, and the swings created electricity, and the electricity created an artwork. So I think if we can have that type of thinking of being creative and opportunistic in the way that we use space, I think that will really be the point of difference for co-living. And so in all of this, I think our approach is to go in with the incentive that to create something that we actually can't already find on the internet, that I can't put on a mood board like I'm showing, something that's unique and we haven't seen before. And this experience, I think, is created through the connection between physical space, the resident, and the management. So I believe Chris is now going to talk about how technology can serve as that perfect interface between those 3 things.
Thanks, Michelle. Chris, you're on mute.
Sorry about that. Thank you, Michelle, very much. I'll try and be brief. I understand that we're over our time limit here. To understand basically the property technology that we're using, we cannot provide a less expensive experience to our residents unless we have a very efficient operating platform. And so if you recall, this is what we're offering to people, the furnished studio. And we talked about the on-site management with a mobile phone that might open up your door. It also gives you access to the share car. It gives you access to the printer in the business area. It gives you access to maybe make a reservation because we have a conference room, and it also provides the single bill and the record keeping and everything else that you need. If you need linen, you can just push a button and it'll come to you. We can go to the next slide. All of this is basically being provided by an app interface and a platform. And that allows us to provide better service to our residents. It allows us to communicate directly with the residents. It allows us to take the reporting and the accounting functions directly from their bill paying onto the tax office, into our investor reporting. It's a streamlined process. That is in development right now with property technology that's already out there in the marketplace, and we're putting it together with integrations that allow it to basically be a very efficient platform. It provides us with a lower operating cost. It then allows us to give a more affordable rent. We can go to the next. All the different services that can be provided, basically, once they apply to book, our residents are in our system and they're basically provided everything through that app function. And so you can basically see what I spoke about before, including the fact that they have their own smart meters in their rooms for their electricity use, for their water use. All of this continues to be reported to them because they're, as we spoke about in the ESG fundamentals, they're requiring it of us. They want to know what they're using. They don't want just a room. They want an interactive space that they can understand what they're doing and what the impact is. We can go forward. What does that allow for us to do? Well, basically, when we had technology from even 2 or 3 years ago, if you were managing a co-living facility, you would still have to escort the plumber into the bathroom. You would still have to take a phone call from a resident. Right now, they're looking at an app. That app allows them to directly communicate with management. It means that the old way was more staff, more site visits, more coordination. Right now, we're talking about less staff, less site visits, automated coordination, and less time managing. And that basically drives our costs down and it allows us to have a higher profit. The formula we see as successful is basically vertically integrating the business and being asset heavy. We want to ensure that we acquire a property in a specific location because it's a specific demographic that we're going after. We develop it to our own standards and designs to ensure that what we are providing to the resident is exactly what they're looking for based on experience. It's not haphazard. We're not out there just looking at any other property. We want to operate the business, and then we will ultimately put these businesses together, the different facilities together in a portfolio, and at some stage we will bring in institutional capital. SixC is who we are. Basically, our mission is to develop and operate sustainable and secure purpose-built co-living communities in attractive locations where affordable living opportunities are scarce. That's us. And thank you.
So maybe just to the panel, Alex, before, I don't know if you want to put up that poll so long, and before Scott go into our call of action, maybe to the panel, you know, we've spoken about co-living. Why do you believe that Australia is ideally positioned for co-living?
I think that what we're looking at is both housing affordability and demand basically culminating at the same time. David, you might want to hop in on this, but we basically see a situation where the houses are so expensive that people cannot afford them. It is basically increasing the rental classifications that are out there, and co-living is just a classification. It's there for the people that would like it.
Yeah, absolutely agree with that, Chris. And I think another key point that's worth raising as well, given the global pandemic, Australia has gone through a very extended period of lockdown, where Melbourne, where I live, most of my last 2 years have been in lockdown. So what that's done is it's put a spotlight on the quality of rental accommodation that was already existing in Australia. There's a lot of very poor quality private rental, sort of mum and dad investor style rented houses that I previously got through. But when people start spending 24 hours a day at home, they start questioning why they live in certain places and it's not meeting their standards. So we're going to see a big push towards quality now, as people, renters essentially demand more from their accommodation, which will, I think, work in the favour of new quality rental accommodation.
Excellent. So to all the attendees, you will see that Alex has posted a co-living question poll. So if you don't mind just completing that for us. And then Scott, if we can hand over to you as a call of action and just show us how easy it is to invest in one of SixC's current co-living projects or opportunities, please.
Awesome. So thank you very much. Alex, can you just let me share my screen, please?
I'll do it. There you are.
So I'm conscious of the fact that we're on the hour. I'm going to do this in rock and roll speed. But what we are interested in is that we spent the last hour learning about a significant opportunity, a significant sector where there's a lot of institutional capital coming in. However, our intention was to not only combine the theory with the practical. And over the next 4 weeks, you've got this webinar, you've got 3 more webinars. Each one of them is educational around a specific sector. However, there is an opportunity for people to actually participate. As SixC has already mentioned, they're actually building a portfolio of 6 buildings at the moment, 6 opportunities. 5 of them are in Sydney. We're specifically talking about the one that is in Brisbane, Queensland. Now, if you look at it very, very quickly, the 4th webinar is going to be on the Australian economy and the Australian property market. So I'm not going to go into a huge amount of detail. But the Australian economy has been rock solid. It was also one of the best performing economies, if not the best performing economy in the G7 post the pandemic. When you look at the property market, Australia has done relatively well after the COVID crisis, but Brisbane specifically has done the best out of all the property markets in Australia. And then we've already mentioned about Brisbane and the Olympics and the impact of the Olympics. So when you look at Brisbane, it hasn't even started yet as to what's expected over the next 10 years if you correlate back to what happened in Sydney 20-something years ago. So where does that leave us in conclusion? Well, Brisbane's the top property market. Affordability is a key issue. First-time home buyers are reducing due to affordability. Interest rates are expected to rise, which will drive rentals even further. Densification is a major trend. The bottom 25% of the market is the most stable, so that's below the $500,000 mark, and there's an increase in rentals as the borders open. What does this all mean for us as investors? Well, today we've explained to you and expressed to you why invest in co-living, and I think the most important thing is that it's an institutional sector that is growing really, really rapidly. The second thing that I think is important is the strong returns. Now, David and the team have already alluded to this, but it's the best performing residential asset out there at the moment. And if you compare it to multifamily, which was the most successful in America in the last crash, co-living is actually outperforming multifamily. And then finally, what is its future growth potential? Well, I think this is probably the one as to why this whole webinar is taking place. It's a significant opportunity. However, any investor would always look at the exit strategy. And just to repeat, SixC is not only providing people with one opportunity, but it's about bundling 6 opportunities together with the intention of being able to sell it on to an institution. So what is the opportunity for people to invest? Well, you can literally get started. You can go onto our platform or you can speak directly with Alex, and you're looking at about a 15% internal rate of return. So that's an annual return per year. And if I want to go and just show you here, let's go and do it live. You can literally go along to the platform. It's wealthmigrate.com. You would literally sign up and log in. I don't have time today to go into all the details, but this is the asset here. You can literally go in. You can see all the different details about the asset. You can go and watch the webinar if you want more information. You can go and read about the risk and all the different risk profiles. You can download all the information. The part I like most is the investment calculator. So if I invest $10,000, what is it going to mean to me? You know, what is it? What is my investment? What are my fees? And you can actually see here that if I invest $10,000, I expect to make $17,492 over the term of the investment period. So you can read all about it. On the assumption I want to invest in this deal, I can literally go in, I can do it from $100. I can go in, and on the assumption my wallet is funded, and again, if people want more information, our team can take you through it. But I basically go agree and I make the investment. And normally at this point, people get very, very excited because you just watched me invest into Brisbane co-living with $100 in under 30 seconds. So in hindsight, what is important is that there's 4 simple steps. You literally sign up, you complete your profile, you fund your wallet, and you invest and manage your platform online. That's the assumption that you want to go online and you want to build a diversified portfolio. Your money is protected by European law. However, if you want to deal directly with Alex and his team in Singapore, then you're very capable of doing that. Alex, if you could maybe just put in your contact details into the chat room for everyone. If you've come through Wealth Migrate, speak with one of the wealth consultants, go to the platform Wealth Migrate, and we'd be able to assist you. So really for us, I always joke and kind of finish off, we're a digital platform with a human heart. And so what we would highly recommend is that if you're interested in the opportunity that you've just seen from not only the industry experts in terms of co-living and where this asset is going, but if you want to actually invest in a deal and start to make good returns, then we've given you the opportunity. So again, to remind you, call to action, if you're in Singapore or Asia and want to deal directly with Alex and his team, maybe Alex, you could just let them know, I know you're online, let them know, I see you've even got a QR code in your picture, which I love about you, and literally people can connect directly with the QR code, and or if they're from Wealth Migrate, they can go directly to Wealth Migrate and deal with one of the wealth consultants. I see Alex has put in his details there in the chat room. So his number is +65 927 07596, and his email is alex, ALEX, at DACHEXMEDIA.com. So that's alex at -xmedia.com. And he says, just reach out to him directly. And Rion and the rest of the panel, whirlwind conclusion, but hopefully we've given people not only the education, but equally the ability to be able to get access to it. And as Alex has just said, if you want to click on his QR code in his picture, it'll give you his contact details directly.
Right.
I will put the screen back up if people are interested around just the contact details as well for Wealth Migrate.
Scott, so thank you for that. So we're over time. My apologies for that, but I think the extra time added value. I'm seeing very positive feedback in the chat box, so thank you. So to our panelists, David, Jason, Michelle, Chris, our hosting partners in the form of Alex and Scott, thank you for your time. We really appreciate the time. And I think just in conclusion from my side, we're looking at a country in Australia which got very good economic support, fundamentals. We've got the Olympic Games. But more importantly, we're looking at an asset class where there could be big potential investment driving up those or driving down the yields, increasing the capital gains, but more importantly, with very good, strong fundamental support for return. So I think that's for the conclusion. Thank you for your time. And once again, to the panelists, thank you for your input.